Hello, Maverick traders. This is Imri, and welcome to today's currency recap. It is Tuesday, June 27th. So, Canadian inflation shows signs of cooling, and equity markets have rebounded. Those are the two big stories from today. So, stocks have snapped a little bit of a losing skid here. Cryptos are on the up, gold slightly down, and oil continues to slide. But I mean, the pattern in oil recently has been largely sideways, but in terms of a larger degree trend, we are looking at still some continued downside in oil. Okay, kicking things off with the S&P 500. So I've had this target here for a couple of weeks now, 45.12, 45.13 if you want to round that up, and we're within striking distance, and it looks like we're gonna head there. I think it's very possible that the stock market did put in a bottom here. In Elliott wave terms, this would be a fourth wave, and we're now heading higher in a fifth wave to tag that 45.12 level, if not slightly exceed it. So, that's my personal target. I know not everyone here trades the stock market or the S&P futures, but if you do, I think this is a really interesting setup. And for currency only traders, don't worry, I've got some interesting stuff for us to take a look at a little bit later on as well. The 10-year yield just continues to trade broadly sideways. There isn't too much more to say about this. Obviously, we're not going to trade sideways in a range forever, and eventually we're going to break out one end or the other of this range. But as of now, sideways seems to be the dominant theme here. And finally, in terms of cryptos, we've met that 33.32 target, and we're now basing. So whether this turns into some kind of distribution top and we roll over to the downside, or if we really do maintain a nice high and tight base, I don't know yet. Obviously, from a trading perspective, the high base would be more favorable, whereas if we do have more of a distribution type top, then we'll have to be patient and wait for a pullback. Okay, so in terms of the market outlook, it's pretty easy here to stick with a +3. We're reaching what I would consider fairly bullish extremes here. So once this next leg up in stocks completes, watch out. I think we're going to have a slightly larger degree top. I'm not saying we're going to get a complete reversal as of yet, but we will get a tradable top at that time. In terms of the weekly calendar, there is some stuff going on. I would say tomorrow is largely going to be quiet. I mean, we do have Powell speaking in the afternoon, but I don't see that being too much of a market mover. Thursday, however, in terms of events, we do have US GDP. Fed Chair Powell is going to be speaking again, and of course, we'll have unemployment claims. Not to mention, there'll be some German inflationary data coming out through the day as well. And then Friday, we're going to have Canadian GDP numbers, and then core inflationary data out of the US as well. So lots of important stuff to keep an eye on. I think tomorrow, however, is unlikely to provide much fireworks if you're looking to those news events here on the calendar to be the catalyst. Jumping ahead now into currency analysis. So cryptos had a pretty good day overall. Bitcoin Cash leading the way. I did take a look at Bitcoin Cash independently on my own, and I do believe we have struck a long-term bottom. So Bitcoin Cash is definitely one of the cryptocurrencies I'm keeping a very close eye on. I don't personally keep as close an eye on Litecoin, but I'm also looking at ETH and Bitcoin here for interesting trading opportunities as well. In terms of fiat currency, the European currencies outperformed today. So with the yen and the Canadian dollar underperforming, the yen has been weak for quite some time now, so there isn't much to add there. The Canadian dollar was weak today off the back of a cooler than expected inflationary report. In terms of velocity, we've got the Canadian dollar at a -3, so we're definitely going to be taking a look at that. And then we have the yen at a -2 and the Aussie at a -1. And on the plus side of the column, it's all three European currencies. Okay, now we're moving on to some interesting stuff as we take a look at some potential trades here. So first off, we have got the yen reaching what is historic territory here. I mentioned this last week, how although this is a very important support zone, the monthly time frame does not show oversold signatures as of yet, which does leave the door open to further yen weakness. But how much further? That really is obviously the probably multi-trillion-dollar question that a lot of people are asking. maybe multi-trillions, a touch dramatic, but certainly in the billions of dollars. There are, crazy aggregate short yen positions out there, and when this trade goes the other way, it is going to be a sight to behold. On the weekly time frame, we're starting to see the yen get oversold here, and if we get a bottom in the RSI, then we'll have some very substantial bullish divergence. So as I drop down into the intraday time frames, the 4-hour, you can see we're still staying below that 50-period moving average. So for now, I'd say look to sell the yen on rallies and on bases until further notice. US dollar, I said we'd get a little bit more of an advance here, and I think a lot of the strength in this dollar basket is actually thanks to a weaker Canadian dollar today, as well as a weak yen. So eventually this rally is going to peter out. I think the way this is looking, this does look somewhat like more like a bull pullback here. We might get one more high in the US dollar, and then we'll look, at least I'll be looking to short the dollar against most of its peers. So I think dollar strength on a broader basis is likely limited, at least in the short to intermediate term. Okay, taking a look at the Swissy. So we've been trading in this channel now for quite some time, and I said, when we break out of the channel, that's what's likely going to lead the Swissy higher. We're trying to break out of that channel. We haven't quite managed to do so convincingly, but if we get a strong candle closure above this blue trend line, watch out. It doesn't mean go pile into the Swiss franc immediately, but that does unlock the door, I'd say, to being more aggressively long the Swissy if you haven't been already. Okay, so Euro, we just broke through resistance and we're headed towards the previous resistance area from which we reversed back towards the beginning of May. So I think Euro strength for the short to intermediate term is probably a good trade. Okay, the pound. Although we look to be breaking out of this resistance area, it's very difficult for me to be outright bullish the pound considering how well these prior resistance areas have worked in the past. And you'll notice this is a monthly chart. We have spiked little wicks above this resistance area in the past. Would not be surprised to see something similar here. So I think the odds are very high that any pound strength in the short term is, I think the odds are high that it's a big bull trap, all right? So I'm personally staying on the sidelines with the pound. I'm looking for the reversal because that is definitely the more exciting risk to reward proposition. Notice I'm not blindly shorting the pound. I really want the market to commit to my ideas before I commit to the market. Canadian dollar, so we got like really within touching distance over the last couple of days to that head and shoulders target, and we just put in this large outside reversal bar today, and that's with the relative strength index being quite overbought. So safe to say, I think we can look for a little bit more weakness in the Canadian dollar. In terms of potential support areas, there is this region right here, these two prior tops, which was a swing high from earlier in the month, June 7th, June 8th. I'd be looking for there for at least for short-term support. Longer-term support, if we break below that zone, would be the swing low from June 14th, 15th. Okay, Aussie dollar. So I said, hey, we've broken out of that resistance area, and I'm going to give the Aussie the benefit of the doubt unless we break back below support, and that's exactly what's happened. I'm back to looking to be a seller of the Aussie on rallies. And then finally, we have the Kiwi dollar that is just not really doing much of anything. It's kind of stuck in this resistance area. I just don't, I think the Kiwi dollar and the Aussie dollar are a little bit difficult to trade right now based on the baskets alone. I think the pattern in the Aussie is a little bit more clear. So out of the two, I'd be more inclined to look for Aussie weakness than Kiwi weakness, at least so long as the Kiwi is trading broadly sideways as it is now. Once it breaks that range, then I think things will get a little bit more interesting for that New Zealand dollar. And that wraps up our currency analysis. So in conclusion, equity markets remain bullish, and as always, focus on the currency in play. Volatility is coming and going out of these markets very quickly, and that means you should always be focusing on proper position sizing. We don't really have any unusual events going on in the calendar today, so not too much to say there. All right, that's it for me, traders, and thanks so much for watching. I will not see you next week. I will be off the grid next week, but I will see you the week after. Happy trading.